I mean, it surprised me completely, right? Because um, I thought that many were like, okay, let's put away the concept of net zero. I mean, at the point in time, Paris was already there. The Paris Agreement was already there. But there were so many countries that actually, wanted to or said committed to net zero. And I thought that was really, really that showed a lot of leadership, and political will, for many countries.
Very much so.
Let's fast forward to today. We have about, I think 145 countries, if I'm not wrong, who have set net zero targets. So that's, I think about something like 74 or 75% of all countries which have set net zero targets. Of course, the latest development is, I think, public domain information, United States has gone away from that, right? So that's a little bit of a backtrack on that. Generally, countries have actually set net zero targets, right, and covering approximately about 77% of global emissions. If you put in back, the US. Right? So I think that's a good thing. But I do feel as if that there is also variation in different countries as well. Some of them have set, which is Paris aligned, net zero by 2050. Some of them say 2060, 2070. And personally, I think that is very understandable because we're all starting from a different starting point. Right, some have more newer, coal-fired power plants. The workforce is not really transformed as well. It's getting ready also, and we also can talk about AI as well, at some stage. But that's generally where things are at, right, in terms of the will, of different countries.
Welcome back to This Week in Carbon. My name is Rene Velasquez, your host for today, and I'm really excited to have a good friend, Eu-Lin Fang, on the podcast this week. Eu-Lin, good to see you again, and welcome on the show.
Yeah, hello.
It was not so. We were just chatting before. You're also a guest on Carbon Exposure Project, so folks, keep an eye out for Eu-Lin's episode coming out in season 4. We'll cover some. We'll cover some different, I guess, topics for today. But Eu-Lin, why don't we start with just a little bit of background? Tell us a little bit about yourself and the nature of your work, and then let's dive into some pretty interesting topics for today.
Yeah, sure. Well, I was just saying that, Renee, it's good to see you, twice already this year, or getting to dialogue with you at least twice. So my year has been pretty lucky so far. But anyway, just in terms of what I do, I have started my career, more than 20 years ago. And I started off as a chartered accountant. Like any, chartered accountant, qualified. When I was overseas working in the UK or London, interestingly, I was actually more focused on oil and gas companies, right? And also on telecommunications companies. So know those industries pretty well. But when I came back to Singapore, continued as a chartered accountant or auditor, but I was more focused on the financial services sector. And that's where I thought it was such an interesting industry because a lot of big money there, a lot of big money, whether or not you're a bank or you're an asset manager or asset owner that can deploy funding in order to progress society, right? Whether or not it's from an economic perspective or a social perspective, particularly for the emerging or developing countries. And almost about 10 years ago, I was asked to build the practice for sustainability and climate change at PwC. And this year marks my 10th year. It's gone by really, really fast, but that's kind of like my brief history of my career life. Yeah.
Great, thanks for that update. It's pretty fascinating. Obviously, you condensed it into a very short introduction, which doesn't do you justice. You're one of the smartest people that I know in and around sustainability globally. But maybe let's dive it down and let's do a more in-depth view around the type of work that you're doing. In terms of, can you give the audience just a little bit of an overview in terms of some of the key areas of focus today within your remit? And then I'd love to dive more deeply into sort of transition pathways and sort of more deeper scope in terms of Asian landscape.
Sure, no issues at all. I think, from a principle standpoint, the way that we develop our services is based on a couple of things. Firstly, where is it are the flows, right, in sustainability, and the areas, of course, is what organizations, whether or not they are in financial services or whether they are in the real economy or their governments, what exactly are the issues of the day, the problems to solve, what do they need help and support on. So I think that's the first guiding principle. The other area is because we do see quite a number of things across the board, whether in financial sector or it's in the real economy or across the world. I think we have some points of view in terms of what is important to champion, what are the things which are the topics of the day, and also the topics of the future in order to build a better, a more sustainable society. So I think that's the two principles of which at least I hold. And the areas, of course, right, that comes out from it, I'll just name a few. Obviously, is a decarbonization, and within decarbonization, there are many aspects of that, right? There's GHG emissions. I'm sure I'll talk a little bit more about that, including Scope 3. That's about the solutions to actually mitigate. As part of the mitigation hierarchy, there is, of course, carbon credits, there's RECs, and so on. There's SBTI, go on and on. So decarbonization is a big area. The other part, okay, which is so important to connect, which is also linked to decarbonization, they need to be seen in a connected way, is around climate risk. So we are, I would say, heading towards a world which is climate impaired, but also low carbon. So within that, from a climate risk perspective, we have both physical and transition risks, and they kind of interact with the decarbonization as well. Because if you have a certain type of transition risk, will be manifested more if you have higher emissions. Certain type of technologies in terms of decarbonizations won't work if you have certain types of physical risk as well. So that's the other part of it, which is the climate risk and opportunities. The other part, which is the adjacency, which we think that it is definitely quite important and very interlinked, is about nature. So nature risk and opportunities as well, because they're so interlinked with climate. Of course, the other parts of it is regulation, sustainability reporting, sustainability assurance, what the standard setters such as the ISSB and also, the other kind of international standards such as the GRI or those coming out from Europe, which is the CSRD, the CSDDD, etc. Those are regulations, but not for regulation's sake, but how can you use that as a tool to transform? So that is really the regulatory part of it. And of course, the assurance part of it is another area as well. We are not going to forget about supply chains, of course, especially in our world today, supply chains and sustainability in supply chains are so important as well. And the other area also is social. What are the social risks that are within your organization or the supply chains too? And if you look at it from a sector perspective, obviously financial services is so important. They help to enable many things. So, sustainable finance is one of those other things that we focus on. And within that, if you double click on that, areas such as, what does that mean, in terms of financed emissions? What does that mean in terms of, pathways for the different kind of sectors? What does that mean, in terms of, looking into taxonomies, right? Or sustainability kind of frameworks. So those kind of things are actually broad areas of what I feel sort of topics of the day, which companies need to grapple with. And also, some of those which are a little bit more emerging. I hope that makes sense.
That makes a lot of sense. Can we, and there's a lot of stuff to unpack there, but can we do a deeper dive into, I like this framing around decarbonization, and then you're looking at it with regards to the risk side around climate risks and more broad sort of risks. Mm-hmm. Can you give us sort of some context there around specific industries and how that's sort of framing out in the real world around the difficulties that they're facing around decarbonization, but also the real world risks that are actually at play with regards to resiliency, etc.
I think what you're talking about is like, how are they transitioning, if I'm not wrong?
How are they transitioning? Yeah.
How they're transitioning. And I mean, I'll just give you an example, just to answer your question directly about let's say in the real estate industry, right? I did quite quickly realize that things like heat pumps are actually quite important in certain kind of geographies, in terms of decarbonization. But if physical risks are there, and so certain kind of technologies are not going to be that effective. So I think you have to look at this hand in hand. But the more obvious one is that, which is more of an opportunity, is that by and large, if you decarbonize, your transition risk becomes less, right? Let's say because of a carbon tax. So you can't really view them in isolation as well. But the decarbonization pathway and also the climate risk, transition risk, physical risk that you have on hand do interact with each other. So I always say that if you want to do a decarbonization exercise, many of companies which have done so already, or you want to update it alongside with your understanding of climate risk, physical and transition, or even nature risk right now, you can consider that as well. But I think, Rene, I just wanted to, you reminded me about how far we have come, right? You talked about, just decarbonization or how our companies dealing with that, and you want to talk about Asia Pacific as well. Do you remember the times during COVID? I mean, it was 2020, but it was really strange, right? We were trying to grapple with COVID, despite the very hard situation that we were in, the area where many countries actually started to actually set their net zero targets. I don't know whether you recall.
Of course.
Yeah,
Yeah. It was,
yeah,
it was a very important time in our industry, just because it's led to so much
yeah.
sort of growth throughout that time.
I mean, it surprised me completely, right? Because um, I thought that many were like, okay, let's put away the concept of net zero. I mean, at the point in time, Paris was already there. The Paris Agreement was already there. But, there were so many countries that actually, wanted to or said committed to net zero. And I thought that was really, really that showed a lot of leadership, and political will, for many countries.
Very much so.
Well, let's fast forward to today. We have about, I say, I think 145 countries, if I'm not wrong, who have set net zero targets. So that's, I think about something like 74 or 75% of all countries which have set net zero targets. Of course, the latest development is, I think, public domain information, United States has gone away from that, right? So that's a little bit of a backtrack on that. But, generally is countries have actually set net zero targets, right? And covering, approximately about 77% of global emissions, if you put in back, the US. Right? So I think that's a good thing. But I do feel as if that there is also variation in different countries as well. Some of them have set, which is Paris aligned, net zero by 2050. Some of them say 2060, 2070. And personally, I think that is very understandable because we're all starting from a different starting point. Right, some have more newer, coal-fired power plants. With the workforce has not really transformed as well. It's getting ready also, and we also can talk about AI as well, at some stage. But that's generally where things are at, right, in terms of the will of different countries. I don't know whether you want to talk about how that translates into just action
I'd actually wanted to dive into that. I'd like to understand how that does translate into action, but not just at the country level, but also at the corporate level. Because today, I think the vast majority of major corporates globally, but let's do sort of a focus, kind of the aperture on Asia. And that
Mm.
certainly seems to be the case. The question is obviously how these ambitions turn into action, and what are the realities throughout that transition process.
Yeah. I mean, I actually do think that the commitment at country level actually does inform how fast, right, actually corporates actually implement their plans as well, right? So I think that that's quite important. Like for example, Singapore, they in the beginning of 2020 said that they're going to be aiming for net zero by the second half of the century. So all of us was like, okay, that's a good start, But I think the corporate action really started right when they actually put out a signal and said that you know what, we're going to be, aligned. We're going to try to push forward to net zero target by 2050. So that's when the
Yeah.
corporates actually said, okay, I think, there's serious about that. The conditions are right, for the corporate level as well to make it happen, right? Because, when the country level says something, the policies or the actions like the Singapore Green Plan, they'll all be implemented, right? It'll make the
Yeah.
conditions right, for
Companies love policy certainty,
yeah,
regardless of the political divide. It
exactly,
gives you certainty to make long-term decisions that are affecting effectively the capital expenditure. So
exactly.
it makes a lot of sense. And then you have direction, you can start to build a plan around it and start
Yeah.
to align and execute.
Yeah, policy certainty, really gives it quite good, confidence, right, for for the companies to move forward. So it was not a surprising, that quite a number of companies as well, whether ahead of the sort of like a country commitments, or just after that, there's quite a lot of momentum. So I just want to be a bit of an optimist here, right? If you think about science-based targets, and many of you know what the science-based target is, is the gold standard in terms of decarbonization, limiting warming to about 1.5 degrees Celsius. So as of, I think, early this year, you've got about 10,000 companies globally, which have been validated by the science-based target, which is actually really good, right? But of course, within that, from a company level, they'll have to make certain type of short-term, near-term targets, which is about 5 to 10 years, and then of course long-term targets as well, including, if you wanted to be more, including some comprehensive targets around Scope 3 as well, which I'm sure we'll be talking about a bit later. But I think that it's really, really difficult to decarbonize, and I do find that companies now, as they head towards the near-term target, which is like usually 2030, they are struggling in terms of meeting some of the targets. Because I'll just give you an example. Scope 2 emissions, which many, many companies have, is very tethered and very linked to good emission factors. So it's again linked back, to the the company, to the country's level of ambition as well, and whether or not they have hurdles, or whether they have, they find it easy, and the conditions as well. So I think, quite a number of companies, it's not unsurprising. Some of them, are finding it difficult to meet the 2030 targets. And of course, right now, we have a certain type of very, very important distractions around the world. So that's where,
existential, geopolitical risk that's happening right now in the world. It's changing the dynamics.
Change, in terms of where companies are thinking about. They're thinking, about, how do I make sure that I manage my supply chain risk and everything, right? So
supply chains are front of mind right now. But obviously this transitions towards Scope 3, right, as well. Because today they're focusing on inputs as it relates to the supply chain, and they're thinking about resiliency because of the shocks right now within the Iran conflict that's happening. How are you seeing that today? If we can just zoom back down to what's happening.
Yeah, in terms of Scope 3, or
just in terms of the conversations that corporates are having, because I would imagine that this is the kind of geopolitical conflicts are resulting with focus elsewhere, more on the immediate rather than the long term. Is that a fair statement?
Yeah, I think that's a fair statement. So I think that they are, I wouldn't say distracted, but there are very important issues to have on hand. For example, we are talking about having this podcast now, in early April, where there are, surging energy prices, oil and gas prices, right, which are front and center.
And then material inputs to businesses. So if you're an airline right now, you're seeing a material increase with regards to your input costs, which are for the jet fuel, right, which is a derivative of the oil inputs. But you're seeing it across multiple industries, whether that's fertilizers for agricultural inputs, or other material sciences that flow from that. But then not only that, you also see it across the transport sectors, like you said. So it is a pretty significant increase in price, and that's obviously material to profitability and to the sustainability of that business long term.
Absolutely.
How are the conversations today with your clients? Where are there?
Yeah, obviously, you've hit on a word which is very relevant, which is resilience, right? And if you think about what is, I shared earlier on, that we are going towards a climate impact world, right? So that's not going to, right? So the thing about what is quite important, right, is about if you wanted to, many businesses are prioritizing on business resilience. Okay, which is why the ISSB standards, or even the SASB standards, are quite important, because they zoom into these sustainability topics, right, which really have an impact in terms of their business resilience and their value. So I think that whilst I think companies are being distracted by very, very big issues, right, but I don't think that they would ignore things that would hurt their business value or the business model. So, one of the key things, would be that we are seeing more and more of the physical climate risks happening, right? Whilst transition risk perhaps, has taken a little bit of a step back, if you think about, the projected IEA prices, that's come down in terms of the carbon prices a little bit, right? But if you look at physical risks, I think they're still there. So how are physical risks affecting, what you say, Rene, about your supply chains, right? How are they over and above the current supply chain impacts, right, that you have because of all these different issues that we have right now. How is climate, how is nature having an impact on your supply chains and also on your operations as well? I think companies who want to be resilient will need to understand that, will need to update that, and will also need to understand how that actually impacts their operations, their products and services, their financial planning, and strategic ambition. So, it's actually quite important. Despite everything, you still need to deal with this. It is actually proper management, it's proper governance.
Yeah, I like that. That's a great summary. Can I go back to just to the broader sort of topic of supply chains? You talked about resiliency, and obviously within the context of the geopolitical upheavals that are ongoing today. But as we look to Asia, Scope 3 is very material because obviously it's related to global supply chains, and a lot of the manufacturing base is within this region. Can you give me just an overview in terms of how you're seeing either the resilience piece or the transition occurring in the real world with your clients and conversations that you're having there around Scope 3 and how they're looking to obviously reduce those emissions? Because it's obviously a supply chain, so there's multiple actors within that supply chain. It's often very, very difficult for decarbonization on that Scope 3. Love to get
Yeah.
your thoughts.
Yeah, understanding why is Scope 3 important, alluded to some of those points just now. But large companies actually have quite a fair bit of impact, right, in terms of their value chain, upstream and downstream. And, as you said just now, I mean, if you understand what your, top suppliers and how their resilience is towards climate change, and that's through understanding in terms of their emissions, I think you're better poised to say, do I continue with this supplier or not for my own benefit, like, not only from
Right.
perspective. But Scope 3, whilst, from philosophical standpoint, I agree with it, it is actually quite difficult, but it is imbued into all the different standards, whether or not it's the CSRD or, it's the ISSB, etc. Right? I mean, it's a very well-used standard. But I'll just say that Scope 3 is not easy to do because you have 15 categories. But I guess it is important because it allows you, that's a reflection about how complex supply chains are, or the value chain is, upstream and downstream. You have 15 categories.
Yeah.
And if you think about the data that is being collected, and I'll just talk about the real economy first, then I'll talk about the financial services economy as well.
Yeah, please.
The data that you collect from that, firstly, there are different types of quality as well. The easiest one is, of course, spend-based. If I buy a mobile phone, or if I'm a telecommunications company, I buy X amount of phones, I have an emission factor, and then I just times it by the amount that I spend. But it's highly inaccurate. So, that's something which is a little bit of more of a broad brush, but it's better than nothing. And then the other area that you can progress to, right, it's really about activity-based or supplier-specific, where you say each handphone is this amount of emissions, which you really want, right? This is what is embodied within the product itself. So the data part of it can be a bit sketchy if you don't have that kind of supplier-specific type of emissions, right? So that therein lies the issue in terms of the emissions part of it, right? But I'm not saying that nobody is looking into this. I would say that there are quite a number of well-meaning organizations that have tried to crack this. I don't know whether you remember there are organizations such as DEFRA in the UK or the US EPA that provide for emission factors. In absence of these very, very accurate data, you can say I would use spend-based, activity-based, times by my emission factor. But that is only relevant for the US and is only relevant for the UK. So it's highly inaccurate. When you say that an Asian company, you want to talk about Southeast Asia, and Asia wants to use that. So in the interim period, until we get every supplier to say that this is my supplier-specific emissions, which is accurate, which is audited, which my customers can use, I think we have to come out with some emission factors which are a little bit more closer to home. And that's where I think that Singapore Business Federation, Singtel, and PwC, we came up with the Singapore Emissions Factor Registry, which is now sitting with the Singapore Business Federation, which I think, most people find very, very helpful. So I would say that Scope 3, units, coming back to your question, is important, but it is actually fraught, with different types of issues. So one of it is the data one, where you have, there can be measurement uncertainty, but I think things are happening on that front to make it better. And for it to be decision useful, that organizations such as financiers, can make decisions on that. I mean, the other area is that, scope 3, of course, is about supplies. Many of it is actually SMEs. How do we level up the
Hmm.
SMEs in order for them to say, these are my scope 1 and 2 emissions. Please judge me by it. Or I'm doing well in it, and so forth. And I'll also share with you another issue around scope 3, which is double counting, right? So
Okay.
because of the decision of how you allocate, whether from an operational perspective, this is my scope 3. Surely it can't be your scope 3. That could be one. Or I said that, okay, this is my scope 3, that it must be your scope 1 and 2. So there
Yeah,
is a
that's what
possibility
I
of,
would have assumed.
yeah, that's what you assume. But especially when, there are situations of now data centers are very, very, very important. How sure are we that a data center, say a data center provider, they have decided that, okay, because of the operational control that I've assessed, I think that this is not my scope 2. I think that's scope 3. But the other party, we don't know whether they have identified that as scope 2 or 3. So there could be overcounting, there could be double counting or undercounting. So that's an area that I find that to have credibility, we'll need to make sure that it fits like a glove. The jigsaw puzzle is well done. And I'll just maybe just tell you one other thing is
Yeah,
regulations.
please. Okay.
So the part about that, right, in terms of scope 3 is, of course, the gold standard is that all companies, especially the large ones, right, larger ones, will need to measure, and understand and assess, make plans, on the scope 1, 2, and 3, right? But if you see the regulations right now, in the past, I think there was a talk that maybe, the larger companies will have to actually include scope 3 as well. But in many jurisdictions right now, I don't think that is mandatory.
Yeah, especially on finance emissions.
Finance emissions, I think for a bank, you've got to kind of try to do that, or else how are you going to get information, decision useful information. But within financed emissions itself, I think there is some talk that is insurance associated emissions, right? Should that be in or out, etc. Right? Facilitated emissions, for example. But financed emissions, of course, is the basic one, but which also has a lot of data issues. If you think about PCAF and how it's applied, and the different types of asset categories, proxies that are being used as well. Data continues to be a challenge to be overcome.
Yeah, thank you for that, because obviously it shows the difficulties of the real world intersecting with this sort of digital and kind of accounting world, right? Of being able to trace these emissions. It's not like there's a counter that just has an automatic counter that shows the CO2 emissions that are associated with manufacturing or with different processes across supply chains. There's inherent conflict, and it's also very complicated, as you said, and the various different stakeholders within those complex supply chains. So accounting for those emissions is difficult. Uh, so thanks for that. And I think it's a nice, an interesting contrast, because obviously on this podcast, we talk a lot about carbon markets. Our focus and our aperture is exclusively on carbon. It's refreshing sometimes to get other voices that are analogous or parallel, but they're not specifically talking about carbon. But we spend a lot of time talking about data integrity and the ultimately the integrity of the ensuing carbon credits in order to substantiate claims. And there's a huge focus on avoidance of double counting in the carbon world, right? Because this is this kind of puritanical view of what we need to ultimately deliver is exactly 1 ton of CO2, but it shows that there's, on the other side of the ledger, it's very, very difficult to account for those emissions, especially in the complex supply chains around scope 3. And it's just an interesting contrast. I won't draw any other further conclusions. Just kind of taking on something that you said at the beginning of your introduction, where you were talking about financial markets and how that was a really interesting piece for you. And then we just talked a little bit about financed emissions. Do you mind if we pivot towards sort of the financing of the transition as a conversation? Because I think that's a
Sure.
really interesting one. Happy
Hmm.
for you to take it whichever direction you'd like. I love your interludes and how you bring it all very back succinctly. Talk to us
Well,
about transition and financing this.
yeah, I mean, I can't talk about transition finance without real economy transition, the
Okay,
credibility underlying
let's start
that,
there.
right? And I want to start first, with the climate transition plans as well for the real economy. And I mean, just let me share a little bit more. I think it's an important point. But
Please.
the financial institutions, right? I think they're sophisticated, and they do want to see climate transition plans. They're important. But the transition plans, they want to see something that goes deep, which is more comprehensive, that actually can move the needle, or there is action and there can be progress. But of course, if you I guess, the UK TPT, I think everyone was trying to also figure out what does that exactly.
Can you explain to our audience who might not be familiar with the acronym?
So the UK TPT is actually the UK Transition Plan Task Force, right? That was actually announced at COP20, and that was, I guess, an initiative, by the UK government, right? And now it's actually now kind of like assumed. The disclosure specific materials are actually now assumed by the IFRS Foundation, ISSB, in 2024. So that was a nice way, they found kind of like a home. But if anybody's interested and says that, okay, I'm a real economy player, a large one, I want to make sure, right, that I consider all things so that I am successful in terms of my decarbonization or managing of climate risk, right? And also try to say, meet the very difficult, kind of like net zero plans as well. So I think that is quite a useful framework. Many of that you'll be familiar with. It starts out with the foundations, the implementation strategy, the engagement strategy, metrics and targets, and also, of course, governance as well. But personally, most of it, I think I have actually seen those things before, but it puts it into a very nice framework. But one of the key things, I think, for a real economy player, right, is that it asks the questions of whether or not, what does that mean, right, in terms of the transition, in terms of your business model and value chain. What are the key assumptions, that you're making? Because that provides transparency. Things always change, right? And are those assumptions or inputs credible? What are the products and services, that you're going to be selling? Are you going to be still doing oil and gas drilling, or are you going to move on to, other things which are a little bit more to help enable, the low carbon society, right? Financial planning, how are you going to fund this? Is this through raising, debt, equity? Do you have enough money to actually deploy on this? How are you actually engaging, the value chain, as you said, Rene, in terms of the supply chain to help you to decarbonize and to de-risk yourself as well? How are you engaging the industries? How are you engaging governments? Because that also matters, as we discussed. And, I think you mentioned a little bit more about carbon credits as well. Actually use, high quality carbon credits for the tail end as well. How are you using carbon credits also? And that also helps in terms of development of the carbon credit market too. And then more importantly, which is super important, is do you have a culture of this to be able to enable this as well? And do you have the right incentives, the remuneration? And how is your organization transitioning from a workforce perspective to deal with this? It's the same thing as AI as well. How is an organization dealing with AI, transforming their workforce in relation to AI? It's likewise as well in terms of the climate transition. So coming back, to the financial services sector, you would have heard before as well how banks are being described, right? They are, often described as the lubricant of the economy, right? And not only banks, of course, but it is also asset managers, it's asset owners, it's insurance companies as well. They play a very, very important role in terms of, in our area that we're discussing about, where we need to deploy the financing, channel the money so that transition happens. So from a bank's perspective, I think that, they want to see these credible climate transition plans, like what I've described, from a real economy perspective. And I think there are also guidances in terms of how banks can actually transition themselves in terms of their financed emissions or their portfolio, whether or not it's facilitated emissions, financed emissions, insurance related IAEs, emissions as well. I mean, I live in Singapore, so, actually on 5th of March, very recently, right, the Monetary Authority of Singapore came out with the transition planning guidelines. So it's to guide institutions. And of course, this is a follow-up or addendum, right, to the environmental risk management guidelines that was issued out by 2020 to establish robust transition plans, focus on, again, those similar pillars: governance strategy, customer engagement, portfolio management, so that the banks themselves can be also, in a transition mode as well. I mean, I can go and double click into that, but again, it focuses.
Actually, can we? Because I think that's a really interesting topic. You mentioned a lot, and I actually want to come back to many of them. But since we're talking about Singapore, essentially, Singapore's positioning itself as a regional hub for sustainable finance. Obviously, there's a carbon market focus within that, but MAS obviously emphasizing these credible transition plans and the taxonomy alignment is, I think, a really interesting point for discussion because it
Mm.
relates to things that you mentioned earlier. So please, can you elaborate?
You mean the taxonomy or?
Well, yeah, just in terms of what this actually ends up meaning for enabling this credible transition financing to occur, and then ultimately how that impacts, I guess, context of how investors and others are looking at this.
Okay, so you mentioned about, I mean, I didn't go through the MAS, transition planning guidelines, which of course, have different bits and bobs into it, but if you want to talk about the way that what you can consider green or not, the credible transition plan, of
Hmm.
course, from a taxonomy perspective, I believe, it was the EU, right, that came up with the taxonomies first. But the EU taxonomy is great, and it is also very, very high standard. I'm not sure whether or not, it would fit very nicely, to Asia Pacific or to Southeast Asia of what's considered green or not. So I do think that the Singapore ASEAN taxonomy, the SAT, that was implemented quite, a couple of years ago, that is quite useful because it accommodates, the transition pathways that are occurring in Asia at this point in time, okay, or the region. So I think that's something that is useful, to bring home, that is a little bit more pragmatic for the region. And it also has amber guidelines, so somewhere in the middle, right? Where is it, that it's just transitioning as well. But I want to go back again, to that at the end of the day, even though it's transitioning, I think the financial services market also needs to see credible transition plans of the companies that they're lending to or investing in. I think that is one of the key
Hmm.
litmus tests, that you have a plan, right? Even though you're not completely green yet, but you have a plan. And I think those kind of principles are also, imbued inside, the taxonomies, for our region as well. So that's how I think that is quite important in terms of the banks themselves, right, or the financial institutions, and being credible.
Yeah, that's great. Okay, and so on that, can I double click? Is ultimately they're lending money to these companies, or ultimately, other asset managers are investing in these companies, and you said ultimately they're evaluating how these decarbonization roadmaps, how viable they are, right? And like you said, it's asking to see these plans, right, and ultimately seeing them come into effect. How are you seeing it within the real world? Obviously, you're getting signals that are mixed oftentimes, but ultimately, how are you seeing companies in the region starting to implement their transitions as it relates to pressure coming in from investors? And is that something that's actually being felt?
No, I think so. And I'm actually quite happy with some of the asset owners. They do ask really tough questions about how are they managing climate risk, physical and transition? How are they decarbonizing? How are they funding it, etc. So
Because
I
perhaps maybe a little bit of context for my question, because I think you alluded to a time, obviously, during COVID, and in 2020 and 21, we saw this perfect confluence of essentially civil society putting upward pressure, and then you had the financial world putting this downward pressure through portfolio companies, and we started to see the two meeting and creating this pressure and ultimately enabling action. It became very in vogue to ultimately have a net zero commitment and then start to implement the transition and ultimately then rely on carbon markets. And that's really sort of where myself and obviously other practitioners in the space and our audience tends to focus on. But since then, obviously, you mentioned earlier that it's basically come off the boil. And certainly in the US, the Republican Party started to put pressure on a lot of asset managers to walk away from, these types of decarbonization focus. And so I'm just curious in terms of how, whether the pressures exist, but maybe not as vocal in the public sort of domains, and ultimately how that pressure is actually now being realized, if that makes sense.
I think thanks for the true meaning of your question, right? But I am actually not sure where things are going at the moment.
Yeah.
Things can change from day to day. So I'm not sure. But I think that one thing is true, which is that if it impacts your business materially, financially, I think it matters no matter what, whether or not, there's
Yeah.
not. So I just feel that if you go back to first principles, and if physical risk is going to ravage your operations, that's a financial risk. And that's something which is material for you to act on, right? Whether or not a country agrees with climate change or not. And I think
Yeah,
it is
there's a
for
materiality to the
management
business. And so they have a
and
fiduciary
boards.
responsibility.
Yeah, I think it's senior management boards will have the responsibility to deal with that.
Yeah, that makes a lot of sense. I think that that's a very salient lens to look at it through, as opposed to the political whims of back and forth, left to right, whatever it might be. But looking at it from the fiduciary lens, because that tends to be what's the most sticky. I think that's a very salient view, especially given the context and turmoil that's existing in upheaving
I
markets
don't I
currently
don't think
as
you
we
should
speak.
be distracted by everyday whims and fancies, right, about the powers that be. I think we should focus about, as I said, fiduciary duty, what's important to protect our workers, to protect our organization. I think we should be quite focused on that.
Great. So I'm just conscious of time. I want to come back to one other topic that you mentioned earlier, which is the growth in data centers as it relates to artificial intelligence, and you kind of use that corollary around uh, how businesses are thinking about AI, but also from the risk of AI around their workforces, et cetera. Can we double click on AI? And I'll let you sort of take us the direction that you think is the most sort of relevant. But how are you looking at it from a broader impact, either on the emissions perspective or more broadly, the opportunities that AI brings? What do you think?
Okay, so I think that again, it is like how I don't know where things are going is a little bit fuzzy, right? In terms of
Mhm.
particularly from the geopolitics side of things, which I know I wouldn't say I understand it completely as well. But AI is actually moving very very fast, right? I would say that AI is something that it would develop quite naturally, and it's difficult to stop it, right? It's not as if that you can say that, okay, I'm gonna step out and not engage with AI. Where I think that AI has been very very helpful, right, in terms of understanding things, knowledge, etc. Uh, um, really, I don't think like knowledge is something which is going to be a competitive advantage for anyone anymore. It is just going to be a base, right? So, in my view,
I agree with you on that one. I think that what we're seeing is this paradigm shift where we're actually commoditizing intelligence with the
and for
fact that
monetizing intelligence, information, etc. But take note, right, that this is actually only on public domain information that you can get
yeah,
on
true.
web, right? So what is actually therefore important is about what's not on the web, right? What's not in the public domain information that AI cannot get, right? But it also can think. So what actually really is important right now is to make that kind of, how it is that we are on a virtual connection right now, right? But I think where the advantage will be in the future is making those kind of physical human connections even more, right? And the other area, of course, is for you, because you are human, you are able to make a little bit more of solutions, okay, which are a little bit more ingenious. So that's where I feel as if we should spend a little bit more time on in terms of transforming ourselves. I'm actually quite sanguine and actually quite hopeful that because of AI, whether or not it is agentic or so on, we'll be able to automate some of our tasks better. It frees up a lot more our time to actually think a bit more, and perhaps also find some of the solutions for these kind of wicked problems that we have in climate change and sustainability. So I'm actually quite hopeful for that. The flip side of it, of course, is
Can I jump in on that? I love that hopeful view on it, because a lot of people, and certainly the media, likes to obviously take on this kind of fear-mongering view of the world. It is a tool, and then coming back to what you said, right? It is digitizing and commoditizing intelligence, but it is a blunt tool in a lot of ways, but it can provide leverage. And so, like you said, it can actually create a lot more efficiency with regards to our daily lives, and trivial things then actually be automated. Fantastic. But it can actually yield us to develop or deliver greater value without forgetting our humanity, like you said. But I think that there are so many really complicated problems that complicated systems, that AI is uniquely positioned to apply its intelligence to help to solve. We see it in biological sciences, where data sets that are effectively available but it's dislocated, can actually now be computed and ultimately yield results. An example is that they can effectively take scans of cells essentially and then start to look at hundreds of thousands, if not millions of different samples, and then derive certain pattern recognition that relates or translates towards identifying cancer in much earlier stages, right? And also enable treatment. And so it can be utilized in so many positive ways. I'm also hopeful that we could potentially harness artificial intelligence to help us with improving sort of the and bending down the curve around emissions. Obviously, right now in its early stages. However, I have to say that we have to be obviously cognizant of the reality, which is as AI is and demand for artificial intelligence and data centers is increasing. Obviously, there's a correlation with regards to an increase of energy, and that energy demand tends to be sort of linearly correlated towards a high emission sort of pathway, even though a lot of the new sort of data centers tend to be directed towards more renewables, but nonetheless, there's still greater appetite across the grid, and that has a correlation with sort of upward trend of emissions. But how do what, do you agree with that statement? Do you still maintain that level of optimism, and can you give me some sort of thoughts around how you see these powerful tools being leveraged to ultimately help us to address, as you said, the wicked problems?
I think that for it to work, right, in terms of using the benefits of AI, at the same time being cognizant of the energy usage, we need to accelerate some of the different solutions for clean energy. I won't name it, right, and I know some of it is a bit more contentious, mm, but I think we need all the solutions for clean energy, safe solutions as well, on us to
Yeah.
be able to derive the benefits of AI to the examples that you just said, menial or not, right? And with clean, safe energy. So, I mean, that's my point of view, and that's how I think, that we should focus our efforts on is we should really the solutioning around clean energy.
Yeah. Yeah, I think that's a really great point. I'm conscious of time, Yulin. Guess any last words with regards to the direction of the way you see things traveling over the next few years, whether it's AI or whether it's within an ASEAN context?
No, I think that, I think you wanted to talk a bit more about ASEAN or Asia Pacific, right? Which, I take an interest of because of my work as well. Um, I do think that there are four things that are going on quite well, for Asia Pacific.
Please.
I'll break it down into the four C's, and I don't mean cars and credit cards and country clubs, right? I mean, the first one is I think that firstly, it's about courage. I think there are companies out there, there are governments out there in Southeast Asia and Asia Pacific, which are actually pretty progressive. If you think about, the largest, EV manufacturers or wind farms or PVs that they are coming from Asia Pacific, the technology and everything on that. So there's a lot of courage in relation to that to just say, I'm going to invest in this and move forward. This sounds like a good idea to do so. And
Yeah,
I think the next C would be caliber. I think there are quite a number of very thoughtful leaders out there in Asia Pacific. You talked about taxonomy, you talked about inputs, into standard setting, etc. I think they are very thoughtful and, they have created something which is unique, for our region. If you think about, what the MAS or the Singapore Sustainable Finance Association have been doing in terms of, coming out with guidances and so on, I think there's very high caliber people who are working on different things to help enable a transition. I would say that, the one thing also is that we have creation. And what do I mean by creation? We have natural creation here. So I know you are a big fan of the carbon credit market as well. Look at the biodiversity and nature that we have in Southeast Asia and Asia Pacific. And the last thing that I would say is that we have connectivity. There's going to be the big platform, such as Ecosparity that's coming out in May. I think these are great connecting platforms where the coalition of the willing can come together and create solutions, get together, encourage each other, and also, share with the world, what are the different solutions that are available and the connections that they can have, So I think those four C's, which is courage, caliber, creation, and connecting.
I really like that. Courage, caliber. What was the third one? Sorry,
Creation,
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 and then connectivity.
and
Yeah.
connectivity.
I like that. It's a great framework. Lots to think about from that. Yulin, again, thank you for your time. Really appreciate it. Always enjoy speaking with you, and you always bring a really, really great view in terms of how you know things are operating in the real world. And I really appreciate them. So I want to thank you for your time, and thanks for joining me on This Week in Carbon. I look forward to having you back on sometime soon. Thanks
Yeah,
again.
no problem. Thanks for
And to our
chatting.
audience, pleasure. Thank you so much. And to our audience again, thanks for tuning in, and hopefully you enjoyed this episode. Please click like and subscribe if you haven't. All right, take care. See you next week.
Okay, everyone.